Thank you for joining us for Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. Greetings, friends, and thanks for tuning into the show. As 2025 comes to a close and we begin to think about all of our aspirations for the new year, we want to bring to you two of Patelco's certified financial specialists to talk about financial wellness and some of the ways that they can support with personalized financial coaching. Here at Patelco, we have a Certified Financial Specialist Program, or CFS program, as we call it, where we have team members obtain a financial counseling certification that allows us to guide members to make sound financial decisions. We are so lucky to be joined by two of Patelco's best, Danielle Lowe Robinson and Jerry Morales, who both were recently recognized at a major event where they were celebrated for their excellence in member service and impact. Congratulations, you both. Congratulations to you both. It is so great to have you in the studio. Thank you so much for being here.
You're welcome. Thank you so much for having us.
Yeah, thank you so much. We can't wait. Can't wait to get into it.
All right, so we want to hear all about you. So tell us a little bit about yourselves and how long you've been at Patelco. Danielle, we'll start with you.
All right. Well, I actually started my banking career here at Patelco almost 20 years ago. Can you believe it? I can't believe it.
That's clout.
So next March, I'll be celebrating 20 years with the Patelco family. So I began my journey here starting out as a teller, worked my way through a teller, then advanced to, we call them MSS, but banker, for those of you listening. That's where we actually open membership accounts. We open up loans, IRAs even. And so during that time, I paid close attention and learned how to read credit reports and understanding credit reports. And then as I was submitting loans, I paid attention to why people were submitting loans as well. And even when they got declined, I also advocated for our members so that we can see about, tell the story, look at what the credit was saying and ask the member the questions to be able to tell the story and then advocate for the member. And a lot of times those decisions got turned around, right? And they got approved because the underwriters, they don't know the story. They just know what the applicant put in, and when we're there, we actually can put in notes. And so I would always take advantage of that noting time and tell the story ahead of time so that it wasn't the back and forth, and we can better chance get it approved. And if for some reason it was declined, be able to tell the story a little bit more, get a little bit more detail from the member so that we can see about getting it approved.
I love that so much because there is still so much a human element to loan decisioning, isn't there?
Got it.
Love that. Thank you for sharing.
Especially at Patelco. We can say that at Patelco. Some other institutions, we don't have that chance to put in notes and tell the story. So
amazing. 20 years. So you started when you were 5?
I did.
All right, Jerry, how about you?
Yeah, so I've actually been in finance for about 7 years now, more or less. I started at a bank, started as a teller there, daily interactions with them, moved up to a personal banker, and eventually became a business banker for some small businesses in the area. I left the bank and eventually came to Patelco, and it's actually one of the best decisions I've ever made for not only my own advancement, just my own sort of financial know-how of what it is. Started back in 2022. I started as a MSS here as well, a personal banker, and then I quickly became a certified financial specialist. Now, this role was extremely important to me because it kind of had me put together all the financial acumen that I kind of learned over the last couple of years and really focus it and give it to our members, right? So it was just a natural fit for me, luckily. I love being able to help people. It is my biggest thing. A story I do like to tell my members and those so you can kind of a little bit know about my financial background is I'm actually the child of teenage immigrant parents. So my parents didn't even have a bank account when they had me, right? So there wasn't really much I could have learned from them. So I made many a mistake growing up, right? And which is why I take this role so seriously and why I like to pay it forward. I've always wanted to be an educator, a mentor, and sort of assist people in ways that I can. So this role allows me to be that person for our members that I needed, right? Because like I said, I messed up my finances by the time I was 25. I really put in the hard work to learn it. And it wasn't until I came into the financial world that I realized this financial education is something that we need to provide to members.
Yeah.
It's something that's very, very much needed. So being that type of person that can help people avoid those pitfalls is great for me, but also recovering from pitfalls because, you're going to hear me say this a lot. Life happens, right? And sometimes you just need a cheerleader in your corner to be able to prop you to that next level. So that's kind of what we are as the CFS here at Patelco.
That's so great. I have a similar story too. I failed early, as I like to say it, but I failed early enough and so hard enough that I wanted to make sure that nobody else had that experience. So that's where my personal passion comes from. Love to hear that from you.
Okay, yeah, and so piggybacking off of what Jerry said too, with the whole, not just me, myself, but the family too, because I know for us, my background, you don't talk about finances growing up for us, right? And so becoming a CFS allowed me to be there, not for everybody, but even for my family. So taking in what I learned as a CFS and sharing that with my family and my friends so that they can start improving their credit and their financial well-being has been a huge part. And then for me, I always treat whoever I'm with as my parents, because your parents, for most of us, they are number one, right? So just having that same love and appreciation with whoever I'm sitting with and exuding that to them and making sure that they are working on their finances, getting the best done that they can with what they have. That's why I enjoy working with the CFS pros.
That personal connection, right?
Yeah, it's so great, you guys. No wonder you guys are Patelco's financial health heroes. All right, let's talk about more financial wellness and how we help people with their financial goals specifically. So we help our members think about financial health as defined by the Financial Health Network. And we talk about these 4 pillars all the time, right? We talk about spend, borrow, save, and plan, which by the Financial Health Network are the 4 areas where if you've got those contained and under control, then you're financially healthy. You're in a good financial place. When we talk about spend, this pillar focuses on whether a person spends less than their income and meets their day-to-day expenses. In the savings category for short-term savings, this includes having an emergency fund. On the long-term savings side, includes funds for future goals like retirement or a down payment for a home. In terms of borrowing, addressing how people use and manage debt. We'll talk a lot about that. And then in the plan pillar, this is about the ability to plan for the future, again, for those big financial goals of yours. So our CFS program is really built around these 4 financial pillars. And Danielle, when we talk more about the spend category, as far as having spending under control, what does that really pertain to?
Number one, living within your means, right? So saving up and paying cash for things and not being so quick to swipe the credit card, paying your bills on time, creating and sticking to a budget. And I know that word budget scares some people. It used to scare me. So don't think you're alone out there. But budgeting scares us so much due to the myths out there. So let's touch on some of those real quick. So one, budgeting is restrictive. You have to deny yourself. The reality is budgeting provides balance. Cutting back may be necessary and could be temporary until you meet a particular goal, right? So, but not everything that has to be sacrificed. So we don't have to sacrifice everything. There's just some things we may need to cut back on while we're trying to reach our goal. A budget puts you in control of your money instead of your money controlling you. And another one is budgeting means I can't have fun anymore. That is definitely not true. Budgeting enables you to have guilt-free fun. So meaning you are not spending money you really don't have and stressing while on vacation, right? So who wants to worry about the PG&E bill being cut off while I'm on vacation? We want to be able to relax while we're on vacation. And then a big one we hear is budgeting is only for people with limited income. Budgeting is beneficial at all income levels. It allows you to make the most of your income regardless of how much it is. So if you think about it, it's actually more crucial the more income you have because there's a greater need for more effective financial management, okay? And if you really look at it, budgeting is the foundational step for saving, building, and paying off debt. So before you can save or allocate funds elsewhere, you must determine how much money remains after all monthly funds, expenses, and bills are paid. So this is what we call the bottom line. When we're working with you, we call that your bottom line. So this figure allows you to see how much can be directed towards savings and debt reduction, okay? And also let me point out that it is more beneficial to save while you're doing that debt payoff plan. If an emergency arises without a savings cushion, you may find yourself swiping that credit card and falling back into debt. Yeah. So you're working on getting out of debt, but if you don't have that savings building, you're going to go straight back to that. So by having an emergency fund, you can draw from it instead. Even if the savings balance doesn't cover the full cost initially, you will still charge less to your credit card than if you had saved nothing at all. So please, please, please build your savings while working on your debt payoff plan. you can start small and increase the amount later, right? So as you're working on your payoff, paying down your debt, your credit score naturally improves. One of the quickest ways to boost your score is by reducing your balances on your credit cards and lines of credit. As those balances decrease, your credit score increases. So again, the foundation is budgeting, and that's how these things happen. So this demonstrates how budgeting acts as a foundation that helps you save, pay off your debt, and build credit simultaneously. So please kick those myths and start budgeting today.
Hey, you heard it first. Budget's not a bad word. And you guys have come out with us in the community to do classes before. How many times have you heard us say, tell your money where to go, not wonder where it went, right?
Yep.
This is what we're talking about here.
Yes.
So for those that are out there that are overwhelmed by how to get started and what to use, what types of tools do you recommend to those that you help?
So one of the main things I use, as you can guess from what I just was talking about, is a budget. So we always want to make sure we start with the budget. So when I started with the CFS program, we needed a better way to budget. So I created 2 budgeting tools myself, a monthly budget and a paycheck budget. The monthly budget sheet, like most, has your normal expenses and your bills and everything. But what I added was a spot for multiple savings goals, because we don't only want to save just for emergency. We want to save for personal funds, setting up that vacation or something that I want to pay for that costs a little bit more so I don't swipe the card. And we also want to look at the long-term savings as well. So I added that to it. Also, information for your credit cards and loans. It lists everything. So payments, limits, balances, rates, and terms, all in one place. So if I'm working with a member on a debt payoff plan and we're considering doing the avalanche method, that's when you pay the highest credit card first and work your way down. Or if we're looking at the snowball effect, that's when you start with the lowest card balance first, right? So when we're looking at that, all of that is right there on the budget. So we don't have to look around and say, oh, did you do this sheet and did you do that sheet, right? It's all right there on that one budget. So some members, like my member Tammy, she looked at her bottom line was like $500. I don't see that. Where is that at, right? So then that's when we move forward to the paycheck budget. Because like I said, I did monthly and paycheck. So we'll move over to the paycheck when they're like, well, I don't see how to make that work, right? On the paycheck budget, it has like the due dates of the bills. And so we use the paychecks. So maybe most people get paid twice a month, right? So we take the paycheck, we look at the bills and their due dates, and then we work that plan based on their due dates. This is what check is going to be used for those bills, and this check will be used for that, as well as things like gas and groceries, because you have to split that too when your budget is tight. So we do that as well. We work that plan. And then as for Tammy, so Tammy and I have worked together for over 2 years. Her goals were to pay off and improve her credit, build savings, and purchase a home within 2 to 3 years. So we have done all of the above by working with a budget, okay? So she has paid off her card and most of her credit cards, and with that, her credit has improved. And just recently, I want to say Tammy just purchased her first home.
Congrats.
Okay, it's a big deal. And it's sooner than planned. Remember, we were talking 2 to 3 years.
Yeah.
So we were looking at next year, a little bit the following year, right? But no, she stepped out on faith and her credit was good because we worked on that plan. Again, paying your debt down is what moves your score up, especially your credit card, because that's that utilization. So your balance versus your credit limit. So getting that down, keeping it under 30% if you can. Lower, of course, moves your score up the fastest. So, but back to Tammy. Before doing that, what we did was we did a mock budget to make sure she can actually pay for and afford the mortgage, right? So we did what the mortgage would be, what the new expenses would be, because when you own a home, there's no expenses, and not just like living in an apartment. Apartments, you normally don't have to pay for your water and your gas. Your PG&E, yes, but water, garbage, and all that. So now we have to include that. So getting past all of that, making sure it works, she can truly afford to pay her mortgage. We even saved 2 months of the mortgage aside from her emergency savings. So if life happens, she knows at least for 2 months, I can pay this mortgage payment on time. And then, like I said, emergency fund is there too. So if she needs to fall into that, if something, where it's months at a time that she's going to be off, she knows that she has that security. So again, budget, 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 budget. It is not a bad word.
Yeah. And you're tackling 2 of the financial health pillars, because you got the plan category and you've got the spend category where they're working hand in hand together. But to our point earlier, the budgeting part or the spend pillar is the foundation for everything else. And we're going to talk with Jerry about credit in a second, but they all kind of correlate together. If you don't have one in order, you can't really work on to the next.
Right.
All right. I am team Microsoft Excel sheet. Are you talking about good old fashioned?
Yes, it is an Excel sheet. Yes, they both are an Excel sheet.
I actually use, like all of us use a lot of those sheets that you use, Danielle, and just thank you. Like every time I see her, I thank her for creating those spreadsheets, because a lot of that is visualization, right? You can kind of want to go into, or what we all do, we think we know what our budget is. We know what we have to spend, but a lot of time it's visualizing and seeing on paper to actually give you that little, oh, actually, I am overspending, right? So really, really great tools we have all together for.
It doesn't have to be fancy. And it's one thing to open up Microsoft Excel and build it yourself. But if you already have like a template started, then it's less overwhelming. And then within there, you can make the notes.
Right.
And you've got tabs for extra years. You got your budgeting sheet on one and another.
Right.
Gary can sing. I don't feel like such a dinosaur. All right, Jerry. So you engage with the community and help conduct financial wellness classes, and you're so great. And especially love your conversations that you have with community members about credit. Why is the Borrow financial health pillar so important in making sure you have a healthy credit profile?
Yeah. So you'll probably hear like a lot about budgeting as well, but credit is extremely important. The kind of unfortunate thing about it is when people need it, they probably haven't established it enough. So that's why it's really important we get into the community to kind of, bust a lot of myths about credit building, right? So, to put it bluntly, a lot of us aren't fortunate enough to buy a house in pure cash, right? We can't buy big ticket items like a car on a whim. That's kind of remedied by this borrow category and this sort of ability to borrow the money from somewhere else. Credit takes time to build, and by planting the seeds early on, you'll be prepared better when you actually need to borrow it. Often I have, like I said, members who need something and they haven't established that. Credit takes time to build, so it's good to get started early. I like to give this analogy to members because credit can be very overcomplicated. Like, how does a bank determine whether somebody's approved? What does a credit really tell a bank, right? So let me ask you guys a question, okay? So think of it this way. Michelle, if you let your friend borrow money, you let them borrow the money, and they say, I'm going to pay you back next week. A couple of months pass by, and they come back to you and say, hey, Michelle, can I borrow another $100? Would you let them borrow that money?
Yeah, your credibility is not all that great with me at that point. I'm going to have to be no on that one.
Probably, right? Or Danielle, say you're out at an event and some random person walks up to you and says, hey, can I borrow $20? I'm going to go to the ATM right now, and I'll be back like in half an hour to get it back to you. Would you let them borrow that? You think about it.
Me, I probably would. Probably would. I don't know what the situation is, but me, I probably would. Because it's on the spot. It's not like I'm going to see them again anyway. But
exactly. And she's like blessed enough to be able to do it, which is awesome, right? Well, you kind of think about it. That's the example I like to give based on less than stellar credit and no credit. Because to your point, if you have no credit, it doesn't mean you're not going to be approved. You just don't have a history to set up right there. So it's really important to know that distinction, because a good credit profile is basically your financial reputation. And I want to say that your credit profile is your financial reputation and how trustworthy you are to borrow money from an institution, right? I do want to give a brief example of how important it is to build this early on and not wait for when you actually need it. I had this member about a year ago, college kid, had just come in and wanted to establish his account. He's originally from the East Coast, and we established his membership. Across all, when we open memberships, I like to talk about credit. We want to talk about everything else that we can help here at Patelco, because we're not here to just open your account and that's it. We really want to build that relationship and help build your future. So I spoke to him about the importance of building that credit then and there. And it is very common that when I speak to members like this, they say, I don't want to mess up. I don't want to get into debt. I don't need it right now. So why would I want to build it right now, right? And it's a valid concern. I can speak to that. I got a credit card when I was very young and swiped it. That's because I was uneducated and I kind of didn't know. After a couple of sessions and, the member heeded my advice, luckily, and we actually opened a secured card, which is a great product to start building credit. And over the course of the next couple of months, over the course of a year, he was making on-time payments, kept his utilization below 30%, and was able to actually build his credit in a year up to 710, which is a good score to have, right? Never went over, continuously checked in with him to make sure he was under his utilization and his credit was good. He actually came to me a few weeks ago, and as you can imagine, he's a college student, part-time work, doesn't have a lot of income. Parents aren't super well off either, so they couldn't help him with much financially. But the unfortunate thing is he received news that his grandmother wasn't doing that great on the East Coast, right? And once he was in that situation, he got extremely sad because he said, I want to go visit her. Like, this is my grandmother. She helped raise me. There's nothing I can do. I can't even save money based on the income that I have right here to go there. Because of that, I talked to him about our different options. Like, hey, maybe we can get a short-term loan if you really want to do this, right? Or a line of credit. Find some way to make sure you can go visit your grandmother. He placed an application and he was automatically approved on that. I did not even have to go to anything. I just said, hey, look, you were approved because you built a healthy credit habit over the last couple of years. You showed responsibly how to use it, right? So what I wanted to make sure he understood is that this was possible because you planted the seed early last year, right? His grandmother's okay, by the way. He was able to go visit her, had great time, and he just was able to spend a good week with her, which is great. That's what we want. So, credit gives you opportunities when the needs arise. That's why it's just very, very important to build it as early as possible, because when you need it, you may not be where it's at. So manage responsibly, think of it that way. Just all in all, I'm going to stress it that credit provides opportunities. This is just one example. Here's an example like purchasing a home, purchasing a vehicle, maybe you want to go on vacation, whatever that may be, right? But just it's extremely important. Take it seriously and start now.
Yeah, and we do hear it from those that we teach, right? That it's counterintuitive. I got to go into debt that show I'm responsible, but to your point, this is your financial report card. How are we to make a decision on how financially responsible you are if we have no record?
And there's a lot of myths. One of the biggest myths out here is like, well, I have to fold a balance on my credit card to be able to build credit. Like, that's actually not true. If you had a credit card and you had like a $5 purchase on it and you paid it off every month, or say you don't even use it for 3 months, 4 months at a time, all that gets reported is that you paid it as agreed.
Yeah.
That's it, right? So even if you want to build it and not use it, please sort of get rid of that misconception that you have to get into debt to build credit, because that is just simply not true.
Yep. And it sounds like both of you are like me, got into some trouble with swiping, feel it early, right? So what do we help members with when they come to us and say, listen, I've accumulated too much debt. What now?
Yeah, so the way we like to start is we have to gather the information, right? We don't know how to tackle this debt unless we have all the information, in one. So that kind of takes into account getting your statements for your credit cards, your loan statements, so we can create that there. These statements have integral information that we're going to need, like balances, APRs, annual percentage rates, utilization minimum payments. All that information is going to be handy on these statements. So gathering this is the first step we like to take. And the next step is going to be a callback, but it's actually establishing a budget, right?
Right.
So I know Danielle kind of talked about it a little bit, so I don't want to go super in depth. But after we gather the information, we want to make sure that we can build a budget, because we want to know how much of that budget can be allocated comfortably towards your debt. And I want to stress comfortably, right? Because we want to make sure you meet the end goal. A lot of members that I assist will think bigger payments mean debt gone faster, which can be a good way to think, but it also can be a little bit detrimental. Let's say you are, make a big payment, you don't know how much can comfortably be allocated, and by week 3 of your budget, you realize you ran out of money. What are you going to do? You're going to rely on your credit card again, buy now, pay later apps, cash advances, paycheck, advancements, things like that is what we're going to need. And it can kind of be demotivating.
For sure.
And this is another thing where like the visualization comes into effect. So within that budget that we do create, we also establish that emergency fund. Another thing that, Danielle mentioned as well, you're going to hear us be repetitive about some topics. It's because they're important. They are important. They're the basis of what good financial wellness looks like. So that emergency fund allows you to not rely on credit, right? When life happens again, you have something to be able to put towards that and not have to worry about relying on that. You'll notice that the spend save, borrow, plan categories are all very symbiotic. They kind of like work with each other. They're really not solo things. You can't just say, all right, I'm looking to repay debt. That's it. Well, yes, that's kind of the intention, but there are other steps we'll go through to do it. So they all kind of work together. Once that budget is established and our emergency savings goal is set and we find out how much of our monthly income can be put towards debt, that's when, plan actually comes to life. We as CFS, we already talked about it, have a lot of great visual tools, those Excel spreadsheets that kind of tell you what your bottom line is, and we kind of work from there. And at that point in the process, the member and I discuss how they want to take on that debt. Again, snowball, avalanche, etc. What works for the member. And what I like about this process is once that hard work is done, it's the first time the member kind of feels lighter. They have hope. And I kind of see in their eyes that like, oh, this spreadsheet says I'll be debt-free by this date. It suddenly became a reality. So that's kind of the process of the financial counseling, sessions where I look forward to, where the member can actually own their financial health. And it's very rewarding to see. From there, once the plan is set, our repayment is good, I like to check in with members once a month or as much as they need me, because debt repayment is never linear. I do like to stress that to members. You may fall off. There may be emergencies that happen, but it just means planning. That's what me and Danielle and the other CFS are here for. We're here to make that plan, but also adjust it as needed so we can make sure you get to where you need to be.
Yeah, and he mentioned the buy now, pay later apps. Boy, I bet you guys hate those. Yeah, good plan. Buy now, pay later.
And to be able to show them, when you fall into that trap, because that's basically what it is. Because when you look at, okay, I wanted to get this coat for my, for my child, or my birthday is coming up. I wanted to get this dress, right? Whereas, say the dress cost $100, and so now you're on this plan where you're only paying $10 a month, right? But then you look at something else. Oh, that jewelry will go good with that dress. So now you have another one. So it's piling up. So where you started out with, could I afford $100? Now you're like $200, $300 on this monthly plan that you could not afford to begin with. So you guys watch that. If you're working with one, that's fine, but don't, oh, now I got this one. It's only $20, and now I have this one. It said it's only $30. That's still not working in your budget because, again, it's not $100 anymore. You're up to $300.
Right.
So
Danielle doesn't want to have to add that to your Excel spreadsheet.
Yeah, don't
Buy now, pay later. Right. All right, Danielle, in addition to helping our members with financial coaching, you also help teach financial education and high school classes. Yes. What do you tell our young people about saving early?
That is a great question. So I actually teach them the same principles we teach the adults, right? So we just bring it around to their level, put it on their level. So making sure to use examples that are relevant to them, with the hope that giving them the knowledge and experience gained through different examples and exercises that we do, it will build strong savings habits now that they will continue to use through adulthood. So for example, we do an exercise to learn how to meet a savings goal the SMART way. So SMART is an acronym for specific, measurable, attainable, relevant, and timely. So this approach shifts a vague objective like I want to save for a car to a structured goal of I plan to save $5,000 as a down payment on a new Toyota Corolla by saving $300 every biweekly paycheck for the next 8.5 months. So this incorporated all 5 elements of the acronym, creating a clear, actionable path, to success that can be used with any goal choice, right? So if we're teaching them this now, can you imagine when they really have bills and things they need to save up for?
Mm-hmm.
So we also discuss the importance of starting to save now and not waiting until you're older, sharing the benefits of it through examples. So we have examples for everything we teach them because most students are, the younger generation are visual. So as well as explain the concept of compounding interest and demonstrate how it helps money grow significantly faster over time. So let's do a quick look. So if you start depositing $50 per month to a 3% savings account at the age of 14, by age 65, you will have approximately $83,000.
Yeah.
If you wait until age 21 to start this same plan, you will have saved approximately $39,800, right? Which is $43,000 less. If you started early. Okay. So would this not encourage somebody to save?
Save.
Right. So to teach them this tool and this guidance early can you imagine, again, if they take advantage of it at an earlier age than waiting until they graduated high school or graduated college? They will be set.
Yeah, and it's so hard to do at that age, right? Right. I want to spend that. Like,
Right.
those behaviors are hard to learn that early, but they're so important. We're talking double there, those stuff you just mentioned.
And that's how we have to give them examples of what they're, dealing with today.
Yep.
So whether it's saving for shoes, right? They're normally into the shoes or they're normally into the games. So teaching them how to save for that goal. It may seem little to us because we're adults and we have, I don't want to say real bills, but real bills. Whereas they're just saving for the small things. But again, if they can get that habit down, they will be doing great when they become.
Okay, Jerry, it's been a tough economic year, right? With kind of no end in sight, especially with food prices still rising and overall cost of living mostly. What are some of the ways that you're helping adults with saving through this?
Sure. The first thing I do want to plug are the resources that we actually have available for all our members at patelco.org. For those not aware, our website has a great tool called Spring4. It's available on patelco.org under our financial wellness tab under resources. So what Spring4 is, it's an actual tool that provides information not only to things like food savings, which is super important now, but also for resources on utility discounts and employment assistance. So please go check that out. The way it'll work is you'll put in your zip code. So it'll actually give you local sort of resources there. So get started there. But, of course, aside from that, we discuss savings in the term of how much from a paycheck, but what else can be done to actually savings. I like to tell members that I split it between two different categories, right? Practical savings and behavioral savings. Practical is a little bit more things you'll do, things you'll actively do that you can see the savings happening. Some examples is, shopping around for car insurance. A lot of times people are just happy with the insurance premiums they have for 2-3 years, not realizing if you shop around, you can probably save a little bit of money there. Something else, refinancing fixed loans. We just had a rate cut a few weeks ago, right? And we are hoping, and hopefully we see more rate cuts in the future. What that means for members is, loans will start to cost a lot less. So if you were stuck at that 13% auto loan last year, look again, you might even have a better credit score now. Rates might be better. And even if you can shave off a couple of percentages off that, you'll save a lot of money in the long run. Other things is discounts through your utility. A good example is the CARE program through PG&E. So you can go to the website and kind of find if you're eligible for that, all types of discounts. I do like to go through with members when I do their budget to say, hey, where can we cut? Where can we save? If you have multiple subscriptions, do they offer bundles, right? Especially with subscriptions. And my tip, and I actually learned this from a member, what she does is she'll have one streaming service at a time and spread them throughout the year. So January through like March, she'll have Netflix. And then she's like, I know a lot of Disney Plus shows I like come at the end of the year, so I'm going to subscribe then. The shows will still be there when you resubscribe, right? So instead of sort of, paying for 12 subscription services throughout the year, break them up. You're not going to need them all at once. And it's a good way to practically save, right? So that's kind of the way I view the practical savings, look into them. But it is something I go with members during the budgeting process. And then the other one that you're maybe more familiar is behavioral sort of savings. These are behaviors you change where you may not readily actually see how much you're saving, but I promise you are. The biggest one, of course, is taking your food to work, I should say, because I know nobody wants to do it. Nobody wants to do it, right? But something you can do is, hey, throughout the week, pack your lunches, do it there. And then on the weekend, splurge. That's when you actually want to, go out, have fun. Other things that you can do is don't keep up with the Joneses. Don't compare yourself to other people. You may see a great designer bag that your friend got. What you don't think about is how did they pay for that? You just see the bag, right? So you know your financial picture more than everybody. So don't compare yourself to others. If there is something you like, wait 30 days before purchasing it. It kind of gives you the time to think about, do I really need this? More often than not, when we go through this, you'll realize you probably didn't need it right there. And if it's still something you want, maybe it's actually worth getting at that point.
If I can chime in there, Jerry, one of the things that I do also share with my members is when you're in a store and you're shopping, right? And you don't go on with that list. And even sometimes when you have the list, you still kind of venture off right into other things. But before you get to that cash register, you want to stop, look in your basket, look at each item that you have. Do I need this, or was this a want? Do I really need this? Can I get this next week or after my next paycheck, right? Before you get to that cash register, you want to make sure you stop and look at everything and make that decision. And a lot of times you'll see that you took at least 3 things out of the basket before you get there. So please think about that the next time you go shopping, because it does work. I've tried it, I do it, and it does work.
Yep. Another great example of like a behavioral change, right? You may not actually see how much you're saving, but you saved if you really looked at it, right? The last sort of suggestion I have, and this one's kind of weird when I suggest it to people, is please get a hobby and a low-cost hobby of some sort. I tell people that boredom leads to impulsiveness, and impulsive spending is the enemy of savings, right? So if you can kind of find something to fill your time with, whether that's learning a musical instrument, reading, or writing a book, doing a DIY project at home, if you can kind of find something that fills your time, you're going to save, because I feel like stepping outside costs $50 minimum right now, just going out, right? So kind of just find something that, actively brings you joy at low cost, and you'll actually find that, you don't have that sort of impulsiveness to spend on a big ticket item just to feel a little bit happy for 20 minutes.
I love that so much, with heavy emphasis on the low cost.
Yeah, 100%.
And Danielle, you're that person that's leaving all the random stuff at the counters at the front. I see that like every single time, like a decision was made here. You know where it gets me is like, I never want to be the person to say, sorry, can you put this back? But I could definitely have thought about it, so I'm going to be brave enough to just put it back or leave it with the cashier. You guys have such great tips.
If you want one more tip, I actually learned this one from somebody that used to work with Patelco, is every time you go to the store and you get your receipt, go to the bottom and see where it says, this is how much you saved. Transfer that into your savings account.
Ooh.
Yeah, it's say like, today you saved $7.93 because you got this discount or you used this specific card. All right, let me go into my bank and transfer that $7.93 now so I can visually see how much I saved from that one. So that's just another little tip that I learned from Peggy Wyman, who was actually someone who taught me. Yeah.
Peggy's so beloved. She was from RT. We miss you.
I miss you.
All right, Danielle, let's talk about this plan pillar. It's the 4th and final pillar, but maybe the most important one, because everything kind of culminates into like our grand financial goals. How do you help members get on a path to reaching these goals, getting to this point?
So you probably already know what I'm going to say. First things first, we will create a budget to determine the total income available for savings. So next, we prioritize saving goals and allocate a monthly amount to each savings bucket based on the desired timeline. For example, if someone like Tammy, who I mentioned earlier, wants to purchase a home in 2 to 3 years, and they also desire to purchase a car via cash in 1 year, the priority right now is the vehicle. Yeah. So we would allocate more funds to the car savings until the goal is met, then increase the monthly contribution for savings for the home. When addressing retirement savings, we will first inquire about the opportunities available through the employer, because most employers have 401ks, right, or some type of retirement plan that you can take advantage of. See if the member is contributing to it. If they're contributing, are they matching, right? Does the employer allow matching, or do they, have that? What am I trying to say? If they offer match, thank you. If they offer contribution matching. So if so, you want to take advantage of that as well. So once you find out if they're doing that, great, we move forward. If we find out that the person is not contributing, we will discuss the reason, acknowledging that economic conditions and living costs may be a factor. Today, more than any day, it is a factor. Yeah. In this case, we will consider opening an IRA and contributing at a self-determined pace, right? And an amount that the member can afford, because we've done the budget, so we know what the member can afford. It's no guessing there, right? So then we start applying that to the IRA. So the IRA normally starts out at $250, right? So you save up for that if you don't have that already, and then you can contribute as much as you want to and just don't go over that max. So every year you want to check and see what is the max contribution amount. For the IRAs, it's online everywhere. So just check that and set your plan, right? If for some reason it can't be a monthly plan, that's fine. Every other month I can contribute. So it's your pace. You go at your pace. If a member is already contributing and taking advantage of the employer match, but is still behind on their savings, their retirement savings, we would discuss opening an IRA again in that situation. So again, being able to catch up, right? So you have that IRA where you're contributing yourself at your own pace, and then you also have the 401k or whatever that retirement plan is at your employer, so that you're building and saving for retirement all at the same time.
Yep. And as counselor and coaches, you guys don't dictate the elements in their plan pillar. So we've been talking about vehicles, and we're talking about buying a home, and we're talking about retirement, but it could be whatever the goal happens to be for that member. It could be vacation to start.
Right.
It could be something completely different. It could be college. It could be completely something different.
Specific to that member.
This is what you're trying to extract out of them as to what their financial goals are. And that's kind of the beauty of the plan. This is completely set by them, and you're helping guide them through the plan.
And that's what the beautiful thing about the CFS program is the same plan will not work for anybody. A lot of times we do come in and they just tell me, hey, what's my cookie cutter recipe for financial wellness? I was like, well, unfortunately, there's no one size fits all sort of budget. I like to tell my members, I attribute it to much like, have you ever tried to go on a diet, right? I tried to do keto once. I failed. I tried to be a vegetarian for 6 months. I failed. And I finally found like, Amy, like, oh, this works for me, right? It is trial and error. And, there may be times when we come up with this plan and the first plan may not be the winner. Don't be discouraged. It just means it wasn't for you, and we're going to find the one that's for you.
I tell the members all the time, revamping is okay. We just want to make sure that we are staying the course, because life is happening, right? It's happening. There's nothing we can do about it. It's happening. So maybe when we started out, income was one number, and then 6 months later it was something else, right? Whether it went higher or lower. So we're always going to be revamping. So revamping is not a problem. So make sure they know that up front. It's confidential up front. So just know that as the process goes, revamping will happen, and it is okay. We're just making sure we stay the course.
Man, I've known you guys this whole time, and I haven't taken advantage of this. So this program, this CFS, Certified Financial Specialist program that we offer, is one of our best kept secrets. I think people just don't all know about it. What is the one thing you wish people knew about the program? Danielle, we'll start with you.
Well, if it's only one thing that I can say, it's gonna be that there is no judgment. So please just come in, sit down with us. We are not judging you. We are here to help you with your plan, help you reach your goal, and we're in this together. So you are not doing this alone. It's always we. When we're sitting down, it's we, and we're gonna do this and we're gonna do that. So please, no judgment. So throw that out the window now. When you come see us, just tell us the truth and we can make things happen.
We all started somewhere, right? And that's where that kind of comes from.
Okay, Jerry, how about you? One thing you wish people knew about our CFS program?
Yeah, we're here to help members from all walks of life, right? We do get a lot of members who need help catching up or they have financial hardships, and that's kind of when they do reach out to us. But we can help you in anything. Say you're planning for a wedding and you really need to know how much you want to save before a certain amount of time. We're here to help that. Say you just won the lottery. Hopefully some of you do. You don't want to squander it all. We can come up with a plan to make sure you keep as much in your pocket as possible. Say you're about to retire and you're scared about the prospect of having limited income and you want to plan through SSI, your retirement, etc. We can help and come up with plans that'll help you make sure you're set up for success. So if there's one thing that I would say, that I want to get across is that every single one of our members listening can get something from us, from this CFS program. We're educators, counselors, cheerleaders, all this stuff we're here to help you with. So, don't be shy. You will get something out of us in one way, shape, or form because we're here to teach you about finances.
And these consultations are free and unlimited?
100% free and unlimited.
Awesome. I always like to say, you don't need to be an expert if you know one.
Yeah.
And Danielle and Jerry, two of Patelco's finest. So we're hearing no judgment zone, financial cheerleaders, financial advocates. Love that so much. So if you want to find out more information about our Certified Financial Specialist program, you can go to our website at patelco.org. and click the Financial Wellness tab, find the Personalized Advice page, and you can fill out your information there and ask for Jerry or Danielle specifically, and we'll be happy to get in touch with you to schedule a visit. Also, boost your financial wellness at patelco.org and visit our Patelco YouTube channel where you can find Danielle and Jerry also. And I want to thank you guys so much for making the time to come down here today.
Thank you.
And supporting our members and community with financial wellness. What you do is so important, especially right now.
Thank
you.
It's an honor.
All right, if you have questions from today's show or just want to say hi, drop us a line at webinars@patelco.org. That's going to do it for us today on Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. We'll see you next time, folks. Be well. Patelco Credit Union is insured by NCUA. Thanks for tuning in, guys. To hear more, subscribe or follow our next video. See you next time.